start reflecting from the current quarter. Lupin, HDFC, UPL, Tata Steel and Bharti Infratel are the nifty companies posting their quarterly numbers today. IDFC and Shriram Capital are set to call off merger plans after the two sides failed to arrive at an acceptable valuation. That's a Bloomberg report. Now don't go anywhere because Darshan Mehta is here with Hot Money. Darshan?
Thank you, Alex. Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Joining us on the show today is Sangeet Lakkar of Newberry Capital, who believes primary markets may drain out liquidity. Sameer Kalra of Target Investing says that trade the dips and invest the falls. And G. Chokalingam of Economics Research said he is cautious on the mid-cap space. However, he is not worried on the overall benchmark indices, that is the large-cap stocks. Today on Hot Money, we'll be discussing stocks like ONGC, Interglobe Aviation, Maruti, Inox Wind and Mercator Lines. So these are the companies that we'll discuss. Straight on to the top stock for the day, and that is ONGC. Company came out with numbers. The numbers were rather weak, but the stock seems to be reacting the other way. What's the way ahead for ONGC given the fact that, how should one trade the counter? I was really surprised of the brokerage views that have come out. There are no sells on this company. It's either a buy or a hold on the counter. So what should one do? I'll start with you, Sameer. Are you bullish on ONGC? What do you make of the numbers?
So I'm bullish on ONGC as overall. This time numbers came a little below of expectations of everyone, given the average barrel per realization was 51.52 as compared to 53 what people were expecting. So operationally it was a weak quarter or a miss on the estimates. But on a good point of view was the natural gas production, which was 8.5% growth. Now the natural gas is the next story for ONGC as far as my view is concerned, because in 2020 they talk about taking the units from 60 MCMD to 110. That's around a 80%, 90% growth. Second of all, the pricing of the natural gas which they get is around 50% discount to the imported price, and that if improves both ways on the volume and the pricing, the earnings would see a quite amount of delta coming up in next 2 or 3 years. And the other part which I am bullish on is the HPCL acquisition, which will make it a wholesome oil major, what we see globally and in the PSU sector.
Okay, Mr. Chokalingam, do you agree with what he said or you have a different view?
I agree, but in fact I am more aggressively bullish on the stock for a few reasons. Excellent balance sheet, got a lot of cash, a lot of investments. The investment at market price and cash itself work out around 50,000 crore, which can easily finance HPCL. That will be a big trigger because acquisition of HPCL on a consolidated basis can give a lot of stability to revenue and profits. That has been the concern for this commodity cyclical business company. The second, the consolidated book value is very close to the current market price. That itself gives you a lot of comfort. And third, on 1 year forward earnings, surprisingly the stock on a consensus estimate basis trading around 10 PE. In a bull market, to find such a large company with such a strong balance sheet at 10 PE, I would just grab the stock. Okay. And fourth, if you have seen in the recent times, the management has repeatedly said that they are planning very aggressive expansion of production of both oil and gas. So that should also add to the...
No, but the other companies in the oil and gas space have rallied significantly, but ONGC surprisingly has not. So what's the reason that the market is not giving that premium to ONGC? So you said 10 times, so why is the market undervaluing it?
Company like ONGC always a discount to private company for obvious reasons. The productivity, management, efficiency.
Even if you take the oil marketing companies, look at the rally that they've had compared to an ONGC.
Yeah, oil marketing company, the case is different because it is always considered like, in my view, it is as good as FMCG because the automobile population is continuously growing, and the volume of fuel offtake from the pump stations, it's consistently growing. So they've got this advantage. And also, in case of ONGC, the oil price crashed. It went as low as $27. So now that is my next trigger. From the bottom of 2016, the oil price has gone up nearly 100%. So this company is going to get a lot of benefit. So, unlike other companies, the profit stream is highly cyclical along with the cyclical, nature of the oil and gas prices. Okay. So that is one reason. But I think going forward, this can, considerably I've given 210. but I am so bullish that the stock can go to even 240, 250 in 6 months to 12 months itself.
Okay, so 2 thumbs up for ONGC. Sangeet, is there a thumbs up or thumbs down from you?
No, it's a thumbs down from me.
Okay.
So there's a contrary opinion here. So for me to be bullish on ONGC, I have to be bullish on the oil price. I partially agree with Samir about the gas story, but gas at present just forms about 16% of the top line. So which does not add into my valuation matrix as such. Yes, there are compelling valuation at this current price, but oil as a commodity, other than the short-term pops, I don't remain positive over a longer period of time. And also the HPCL merger, I don't find any synergies between the two companies. It's again an instance of government interference, just trying to drain out cash, the excess cash which is there. So ONGC would be buying HPCL stake, a government stake in HPCL at the market price and make HPCL its subsidiaries. So I don't see any valuation rational to this merger as such.
But that valuation rational will not come till the time the acquisition happens, because right now everyone is getting a little pessimistic about how will ONGC fund it. Will it use the cash on the books? Will it use debt? Because if it uses the debt, there are to 50 to 60. Because it's not a more of a technical issue, it's more of a drawing and the supply issue which is getting created. So the longer the OPEC takes into a pause or that kind of a thing, if the drawing comes strong, the prices will shoot up more quickly than what people anticipate right now.
So shale oil production comes with a lag, but it comes with the shortest possible lag. So in next couple of months, if the oil crosses 60, I'm sure that production, incremental production will come through. As far as the HPCL merger is concerned, HPCL continues to be a listed company, and with ONGC being the parent, you're also talking about a holding company discount. You know, so I mean, I don't find.
But that
ONGC
gives you a 1800 crores dividend per annum to ONGC.
No, but the cash will be drained out, and
that depends, because see, MRPL today is owned 72% by ONGC, and in August and July, HPCL showed interest to buy that stake. So if that goes to HPCL from ONGC, that itself generates a 15,000 crore kind of a cash. So that itself can fund that kind of half the acquisition price. So it's more of how they get it funded by, which leads to that cash accretive and EPS accretive in the sense.
So I think for ONGC, I think the main trigger now is it's a 2 thumbs up for ONGC. Sangeet is not rather bullish, but I think the consensus view is that the future of ONGC now will pretty much have a trigger depend on what they do and how they fund this entire stake with HPCL. Let's move on to the next stock, and that is Interglobe Aviation. Same problem here. Crude prices are rising significantly. There are significant amount of problems with their engines, and that caused a lot of their planes to be grounded. What should one do with Interglobe Aviation? It's not the cheapest as far as aviation is concerned. It's trading much more expensive than a SpiceJet or a jet. But what should one do with Indigo? I'll start with you.
Yeah. There is no doubt Indigo is operationally the best company in the aviation sector, but my argument is that it is in price. That's why it is trading at more than 40,000 crore of market cap. So what we have been doing is that we booked profit out of Indigo. We have been aggressively buying Jet Airways for a couple of reasons. Its market cap is only around 7,000 crore. It is 1/6 of what Indigo commands. And second, according to me, the Jet Airways is charging the premium to tariff through this jet privilege pro package. If they have retained this kind of market share by selling ticket at premium, I am sure in future also they can retain the market share.
No, but what has changed with Jet and Indigo? It's the same thing, whether the market cap was 40,000 crore or something. So there's nothing drastically that's changed between Jet and Indigo.
It changed.
What was the change?
Market is looking at only the EV and the market cap. Because it had accumulated losses. The best way to see is that you look at the even current liabilities, non-current liabilities. Add to that to debt.
And no, I'm not talking about the financials. I'm talking about the argument that you said that if it is selling tickets at a premium and the market cap of Indigo is 40,000 crores and Jet is 7,000 crores, There's nothing changed. There's no trigger that has changed. Jet always sold it at a premium.
Yeah. I haven't finished that point. I haven't finished that point.
Okay.
What I was trying to tell you is that in future going ahead, that is what the market is concerned about. It is certain, in my view, to retain the market share, because anybody who can, give discount and grab the market share in the economy class, rate. But that kind of threat is very limited for Jet Airways. That is why I would give premium to Jet Airways. That is my argument.
Okay. What about you? Do you agree? Which your top pick do you like aviation as a space? And if you like it, is there something that you prefer, Indigo or some other airline there?
See, for me, aviation is a little bearish now because I'm more optimistic on the crude prices. So, but Indigo in itself becomes more neutral because of the operational efficiency they have. So they are able to manage or subsidize the crude increase prices, and they are able to absorb. The only problem which I see out here right now for Indigo is the standard planes which they have. So every month it costs around 40 lakh rupees per month for one plane to be standing at the ground. So they have right now 13. So that issue, if keeps on building up and doesn't get sorted out, then it'll be more burden on the cost basis. Otherwise, aviation I'm a little bearish on, so I really don't have a top pick for me right now.
Okay, what about you, Sangeet? Anything on aviation?
So I am positive on the sector as such. However, so it's a very unique industry. So Indigo has about 41% market share, which is mammoth. In spite of that, they don't have pricing power. So if an airline is flying at the same time, more or less, I would obviously book the cheapest possible option. I'm more positive on the SpiceJet, because there is also a financial leverage story which is there, other than the operating leverage. They have the highest load factor also.
Okay.
So I continue to remain positive on SpiceJet rather than Indigo.
Okay, so that's the view that's coming in on the aviation space. Mr. Chokalingam is saying that Jet makes a better deal than Indigo. So Sangeet does believe that SpiceJet now makes a better pick than Indigo, and Samir is rather neutral. He's neutral or slightly bearish on the space because he's bullish that crude oil prices will keep on going much higher. Let's talk about the next stock, and that pretty much was the stock that came out with numbers on Friday. Maruti came out with a very strong set of numbers. Surprisingly, the counter reacted negatively post the numbers. But what's next for Maruti? A couple of brokerages now coming out with targets in excess of 10,000 for Maruti. Is it possible 10,000, Maruti?
It could be possible. So let me confess, I have been proven time and again wrong on this counter since last couple of years. Having said that, I still remain conservative on this stock.
Okay.
I mean, it is the second most expensive stock, not only in India, globally.
Okay.
The first expensive stock being Tesla, which is not comparable.
Okay.
So purely on the valuation concerns, I mean, I fail to find a reason from such a high base. Where is going to be the next PE expansion coming, or where is the next growth coming from?
So, but then, it has excellent return ratios, it is debt free, very strong balance sheet, it's the market leader, so why should it not get that premium valuation?
So, excellent company, but what about the base? Maruti is now selling close to 160,000 cars a month. I don't find a reason where a PE expansion can take place from here on.
Okay.
So I remain a little conservative purely on account of valuations.
Okay, the
valuation. If you
valuation.
talk about the company, obviously it's the best in class company.
Valuation, you have something to add? I think you wanted to say something.
So he's talking about the base, and the base, if you see, is 160,000. That's around 400, 500 dealer network which he has in the certain sense, not counting the dealership outlets they have or the DSAs they have. Now, if you take a 300 kind of a cars per dealer, that's a minuscule as compared to taking the US. US it's around 1,000, 1,100. Right now they have announced previously 1,000 crore expansion for the dealership. See, now the whole plus point is the cash which they have on books will go maximum towards the network expansion. Earlier it was going in the manufacturing part. So now that has been taken care of, the JV plant which is coming up, which is Gujarat. But the only trigger which I see on the other side, or the negative which came in the numbers, was the margin. Now it was to be blamed to a raw material increase and discounts to a certain set. But my point is, if more comes out of the Gujarat plant, the margins will be less. because eventually it acts like a supplier to the dealers. So over there the margins will go down as the volume. So that's why they are trying to expand on the dealer network side so that the volume compensates for the margin falls.
Okay.
That's what I see. So I'm a little neutral to bullish on the stock.
Do you think they'll be able to do it, this dealership network, and will they be able to get that volume
Yes,
on such a high base? That's what his point was.
See, it's again about again we are talking about something per dealer, how much it does. See, earlier even 80,000 used to be looking very big. So going from 80 to 160 wasn't that kind of a long journey for them. So eventually, if the dealer network, they are able to expand. So now they are going for a 1,500 dealership expansion. So that is huge. Out of over there, they are taking all the setup costs and they are going to lease out. So that lease becomes another kind of an income for them. So the EPS growth will not be that kind of a problem. Yeah, there can be a certain dip because of certain valuation, but on the long-term story or a medium story, I think it will be sustainable.
Valuation or
No, even I went wrong by selling early, but then I am regretting because it is unstoppable. The growth is going to continue, and on 1 year forward earning also it is trading only around 30 PE. I agree with him, the margin will come down when they start selling Gujarat plant cars. But the point is, it is not like Sun Pharma taking over Ranbaxy at high cost.
Okay.
Here, the incremental investment will be negligible. So therefore, the return on capital employed will be very high, and volume growth will help the company. I'm pretty sure it's a good long-term growth stock.
Okay,
to
so
hold.
that's the view that's coming in on Maruti again. So it's a 2 thumbs up for Maruti here. Sangeet believes that valuation. He likes the company though, but he says that valuation is expensive. To grow on such a high base is something that could be a problem. Whereas the other two guests do believe that valuation is not a problem, growth will come in. We had Samir who gave us a comprehensive view on why he believes that growth will come in. Before we move on, here's a quick recap of the guest view on the stocks that we've covered till now. Okay, the next stock that we'll talk about is Inox Wind. Recently, what had happened was that the wind tariffs there was bidding, and pretty much it's at all-time low now. Is there scope for renewable energy makers like Suzlon or an Inox Wind? We'll ask our guest, Mr. Chokalingam. I'll start with you. Any view on Inox Wind? Do you think that there is future in terms of what exactly is happening here?
I mean, I have a very scary view only on Inox based on the balance sheet. If you look at the June quarter, they have done about 117 crore top line. But if you look at the March number, the debt is around 1400 crore. The receivables were around 2000 crore. So very scary. I mean, if you have such a small revenue base, to manage this working capital stress and the leveraging is really going to be extremely difficult. On the other hand, the industry structure also changing. What is happening now, the solar power also cost has crashed. And accordingly, even the thermal power cost has to come down. So therefore, all the competing sources of the power, they are going to squeeze the margin very badly. So I am terribly negative on the stock.
Okay. What about you? Do you have a view on Inox Wind?
So I again remain bearish on the stock. As Choka pointed out, the numbers are dismal. But obviously, having said that this is a write-off year in any case, because there was an industry transition from a feed-in regime to the auction regime. So the sales were down 70%, but this was very well expected.
Yes.
Even the management had guided that FY 18-19 will continue.
So they had said the order book is virtually zero now.
It's actually zero, and there are a lot of PPAs cancellations. Even the earlier PPAs are cancelled and all. So we'll have to see how this transition plays out. Before that, to take a call would be very difficult.
No, but that has already happened, everyone. So at this price, does it value that growth will come in?
So I might as well pay a 20% higher price. But once I see the transition through from this regime, how it's going to impact the players, and there are other players also, and it's a competitive space. Though the future looks bright for renewables, having said that, the isolated players are not making money in any case.
So what about you, Samir?
I have a bearish view on this. It's mainly because, there is a transition happening, but within that transition time, how much burn are you able to take? That's more important. Now, if you have such a huge debt on you, those 2 years the receivables people will not tell you that, okay, I'm going to pay you because you're going through a difficult time. And the debt guys will not stop taking payments out of you because you're going through a transition. My only point of view is how will they even survive for that FY18 or a 19 story post that. So if their negative surprises keep on coming quarter to quarter, I don't think so this is a price to enter right now, and rather wait for it and come at a better price.
Okay. But this will apply to only Inox Wind or pretty much all the other players also? Are you in this industry as a whole?
The only problem is when there were projects at 4.5 rupees per unit, people were gung-ho about wind energy, right? Then it came down to 3.6, then it came down to 2.9. Now this kind of a fall on the prices will affect the previous projects which you've done. Because the PPA guy will always cancel it and say, why will I pay a 4.6 in from that project and not pay a 2.9 again? So there will be always a problem till the time the stabilization of the pricing comes in. So same somewhere I see in solar also.
Okay.
So it's not that kind of a easy story which is going to play out in the renewable, because the pricing at which the new bids are coming is dropping drastically at a very speedy point, and they are all debt companies.
Okay.
There's a very less debt-free or a less debt company to survive that whole fall in the prices.
Okay, so that's a consensus thumbs down from all our 3 guests on Inox Wind. Before we move on, let's just mark the Nifty, because I've been told that the markets are actually seeing a little bit of selling pressure. If we can pull up the intraday chart of the Nifty Bank, it's come off from the highs of the day. It was up almost 50 points. So market still trading with a positive bias, but to come off the highs of the day. Let's also bring up the Nifty PSU Bank Index, because that was the one that was tracking was higher. So everything, the market seems to have come off the highs of the day, but no concerns at this point of time. Okay, let's move on back to hot money. The final stock that we are talking about is Mercator. The company is in focus. The company's stock price has been doing rather well over the past few days. The Baltic Dry Index is up almost 130% from the recent lows. Obviously, it's into shipping, but it has a lot of allied businesses also. So what should one do with a stock like Mercator? I'll start with you, Sangeet. Are you bullish or bearish on Mercator?
So at the outset, the disclosure, we own this stock and we have recommended to all our clients.
Okay.
We are very positive on this stock.
Okay, what's the story?
So there are a lot of stories which are coming in simultaneously. Whatever bad could go wrong with this, whatever wrong could go wrong with this company, as we have seen in the past. But now it seems that all their sectors should fire. So their management is aggressively talking about deleveraging the balance sheet.
Okay.
Current debt is about close to 1,400 crores. And they are expecting about 1,500, 2,000 crores from sale of their coal assets.
Okay.
It's trading at, even though in spite of the recent run up in the stock price, it's trading at 4 times EV to EBITDA. That's minuscule for this company. The dredging assets were idle in the last quarter. That's why the numbers did not come through. But from 1st of July, that's also been employed in a high yielding regime. So that numbers also you will see in this quarter results. So I continue to be very positive on this stock.
No, but the story is always there that they are looking to sell their coal assets. But will they be able to do it finally, do you think?
I should be able to. I think they should be able to. There's also a demerger plan which is there in front of the board.
Okay.
That also is going to be another value unlocking thing.
What are they planning to demerge?
The 4 businesses. So they have 4 businesses. One is shipping, one is oil and gas, one is coal, and the 4th one is the dredging. So I'm very optimistic on the dredging business. The shipping business, as you said, the Baltic Index is at a high, so that should also do well. The oil and gas business, they have they should be doing a new exploration somewhere next year.
Okay.
And that number should kick in next year. So I'm overall on a valuation parameters.
So you're saying that shareholder value will be created if they do this demerger, or they manage to sell their non-core asset. And if it doesn't, would you still be comfortable? Because these stocks are going on for a while. So let's say if it doesn't fructify for a long time, would you still be bullish on the core business of the company? So if you see the debt profile of this company, they have deleveraged to a significant extent. If they continue to continue in that path, I remain very positive. Okay, what about you, Mr. Chokalingam? Do you agree?
For every rise, I would advise investors to sell the stock, because basically we don't like this kind of balance sheet. If you look at the debt around 1,600 crore, and also there is a huge other current liabilities which is to the tune of 900 crore. 2,500 crore of liabilities, you are running a turnover of around 2,100 crore. So this kind of balance sheet always give me some nervousness. And the stock also from the bottom has run up a lot. So I would rather sell for a very significant rise.
Okay, Samir, you don't cover the stock, so you don't have a view on it. So that's the view that's coming in on Mercator lines. What Sangeet is saying, he's rather bullish because he believes value creation will come in. But Chokalingam is indicating that this stock should be sold on every rise. Before we wrap up on the show, here's a quick recap of the guest view on the stocks that we've covered till now. Okay, Chokalingam, Sangeet, Samir, thank you so much for joining us on the show. With that, it's a wrap on Hot Money. Thanks for watching Bloomberg Quint.